Tonight's first order of business, some uplifting news about renewable energy. You know, the kind Canada doesn't have a big stake in. It seems a combination of better technology and cheaper prices has emerging market nations adopting renewables at an amazing pace, up almost 150% last year. If that pace of adoption is maintained, renewables could grow exponentially, and according to some, unseat fossil fuels as the dominant source of energy globally within a decade or two. So, Canada, what's the plan? Welcome to The Exchange. The global race is on to tap renewable energy sources, and it seems Canada is losing badly. Research from ClimateScope looked at 55 countries in Africa, Asia, and Latin America, and it showed emerging markets are investing in renewable energy at twice the rate of developed ones. Investment amounted to $122 billion last year, up from $59 billion in 2007. That translates into 142 gigawatts of new renewable energy capacity in just 5 years in those markets. The leader is China. That might be tough to see through all the smog, but it is the world's largest manufacturer of wind and solar equipment. It's also the source of the most demand for the technology. Just last week, China said the amount of coal it burned last year fell for the first time in this century. What's driving the boom in renewable energy investment is actually how cheap it can be. For example, in Jamaica, where wholesale power costs about $300 a megawatt hour, electricity from solar panels is half the price. Also, these burgeoning countries have far greater need to invest in new capacity, while countries like ours have a more fixed energy sector. The global coordinator of the report is Ethan Zindler. He's also the head of policy analysis with Bloomberg New Energy Finance. Great to have you with us. Ethan, I want to start with what's really driving this, and is it a combination of things? Obviously, as the cost of this technology drops, is that the biggest catalyst for adoption?
Well, there are, as you mentioned, there are a number of things. And first and foremost, actually, a number of these developing world countries are seeing rates of economic growth that actually exceed those that we're seeing in Western countries and Northern countries. So that's the first factor. The second is that, yes, we have seen a very dramatic decline in the price of clean energy equipment and services. And that's starting to filter through the marketplace, particularly in developing countries. So those are the two main factors. But then there are the same kinds of factors that drive clean energy sort of globally. And those include things like high electricity prices, the desire for greater energy security. These are the kinds of things that are really universal to many countries in terms of wanting to adopt a more clean energy future.
So when we look across the landscape, one could imagine that in China, a desire to move away from pollution-causing energy sources is a driver, whereas, as we said, in Jamaica, it's probably cost. Is it a different kind of driver in every place?
Well, it's different things in a lot of places, and China is a huge part of the story overall, and a very large percentage of the overall amount of growth that we've seen in the developing world. In China, there's clearly a need to try to decarbonize, and what's driving that is, frankly, the pollution levels have gotten simply intolerable in some of the largest cities, including Beijing and increasingly Shanghai as well. And the interesting thing about what's gone on in China is that the leaders there have really for the first time in the last 12 to 18 months acknowledged that this is a problem and outlined steps that they want to take to try to address it. So it's really an overlap there between common smog and a desire to fuel a clean energy industry. One other thing that's going on in China that's particularly interesting is that they are the world's largest manufacturer of solar panels and of wind turbines. So they have a huge manufacturing base, and they want to actually be the demand side for that market as well.
So one thing we've seen with some of these technologies, particularly solar, is that government subsidies have played a big role in developing markets in supporting them. Are we getting to a place where that no longer needs to be the case, that the cost is actually coming down to a place where we can get rid of the subsidies and treat this like a real sector with real economics behind it?
Yeah, well, actually, I would say that some of the heaviest subsidies we've seen tend to have been in the more developed countries, particularly places like Germany or Spain or even Japan or the Czech Republic. In developing countries, in a lot of cases, they've been trying to find what so-called market mechanisms to spur clean energy growth that are not as costly. So, for instance, in Brazil or South Africa or Peru or a number of other countries, they are holding auctions or reverse auctions where they ask developers of clean energy projects to bid in. And whoever bids in at the lowest price is the one who wins the power contract to supply the grid.
So when we look down the road, I mean, we talk about China reducing coal production for the first time. Do you expect to see places like America, which of course is now energy sufficient, self-sufficient? We're looking at onshore oil in a new way, starting to think of these technologies in a new way, that renewables will gain currency in the developing markets, in the developed markets rather?
Well, certainly in the developed markets, obviously we've seen some ups and downs. We've seen high rates of growth in places like Germany, and then declines actually in terms of the rates of growth there. The U.S. has been a bit of an on-again, off-again market for wind, with solar growing fairly steadily. So I think we're going to see a variety of different results in different places. In the U.S., we also have a regulation now that's going to go into effect within the next year, most likely, regarding reducing CO2 emissions, and that's going to have an impact through the marketplace as well. So there's a lot of factors at play, but I think one of the interesting things about this study is that we look specifically at developing countries and the kinds of opportunities that are there. And for a long time, the conventional wisdom has been, well, if you're a poor country, well, you can't do clean energy. It's too expensive. Whereas in your rich country, you can do clean energy because you've got the means to do so. But that's not really, in our view, that's a false dichotomy.
So when we see this rate of adoption, is it possible to forecast the rate at which it is changing? In other words, that it isn't linear, and that when we see these predictions that suggest that solar, for instance, could power the world's energy within 20 years, it actually starts to look credible based on these adoption rates?
Well, to be clear, that's not our view. I mean, some people have some fairly optimistic views on how much clean energy can sort of take over the world. Our view is that there's going to be an important role for fossil fuels to play literally for the next decades, but that renewables are going to play a greater and greater share as these prices continue to get felt through the marketplace. So I don't think this kind of thing happens overnight, but some of the more interesting stories really are in the developing world, where you have communities that have no access to any electricity at all. And so the question is, what is going to be the first electron that enters their house or goes up on their roof to light their home? And there's really nothing that says that has to be an electron that's generated by burning coal or by burning gas or burning anything, frankly. And it could very well be a solar panel instead.
So in other words, it's not a doomsday scenario for energy producers like Canada, but maybe a slow decline.
There's nothing about the energy industry that happens overnight. So the reality of it is that we're still going to have strong demand for coal and for oil, but it's been declining in some cases, particularly for coal in the United States from the power sector. So there are changes afoot. These are long-term trends, but it takes a long time, it takes years, decades for change to come. But our view on one of the things on our main points on this study is that the economics are becoming very competitive for renewables now in many parts of the world. Not everywhere, not all the time, but in some parts of the world right now.
All right, Ethan, great to have you with us.
Thank you.
Ethan Zindler is Global Head of Policy at Bloomberg News New Energy Finance.